So I think we're one microphone short. So I will ask the question, and then I'll hand the microphone to you, Dan. I think we're all disappointed to know that Joe's someone's favorite as well. So we're off to a rough start. Let me start with just a question for the broad group. Let's talk about the value of sports assets. We continue to see the value of every transaction increasing, sometimes increasing at step function rates. And so what we think about all the time is this sustainable? How long can this last? It's been 15 years of just straight up and to the right. Are we at the peak, or is there a lot more to come?
Great. Maybe I'll kick it off. So yeah, I do think that valuations, not surprisingly, will continue to go up. I think that's based on both fundamentals and also the demand. So on the fundamental side, continue to see strong revenue growth from media, from game day, from sponsorship. And on the demand side, when you think about control sales, there continues to be just incredible demand for a very, very limited number of assets, and that will continue to drive pricing. And then on the minority investment side, you're seeing a ton of new entrants enter the game, and you're seeing a ton of capital being raised to go after these opportunities, which will continue to drive up pricing.
Joe?
Excuse me. Wrong time to choke on some water. Could not agree with more with what Daniel just said. Obviously, the onset of institutional capital has had a profound impact on the value of sports. We've had a situation for the last decades and decades in ownership where traditional ownership has worked out quite well with regards to performance on the field, performance on the court, value accretion, financial performance, compensation for players and the like, and that's gone incredibly well. We're now entering a new phase, right? And that historical ownership was obviously driven by high net worth individuals and some level of leverage that went along with it. We're now entering a new phase, obviously, with institutional ownership within sports, which has driven a great kind of 5-year run so far within the U.S. I'm really focused on the U.S. right now with this commentary. And it's been kind of had a profound impact. By my count, about 35 or so clubs in this country across the largest U.S. men's and women's leagues that exist have taken in some form of institutional capital. That has obviously had an impact on the value. But there are natural limitations to that too, right? Obviously leagues are going to be very thoughtful and methodical about their policies around that and the impact of that with regards to what their ownership base looks like, what it looks like at their governors meetings, what it looks like from a governance standpoint overall. I think they're going to be obviously the range right now, call it 10 to 30% of ownership from an institutional policy standpoint. Makes a lot of sense. And the other thing I think to add on to this whole thing is that I don't think you can discount the importance of the high net worth individual in this country, right? Obviously, ultra high net worth individuals have compounded their ultimate firepower, if you will, right? And they turn a lot more of this firepower towards the attention of sports, right? And so when you look at the two biggest transactions that have occurred over the last couple of years and the Commanders and the Broncos, both of those were done by individuals, or groups of individuals, I should say, with a modest amount of leverage. So, generally speaking, I'm completely in agreement with what Daniel said, in that it's a very conducive environment to continued valuation accretion and from both the supply and demand dynamic.
The only thing I'd add is that the teams are getting so expensive in the NBA and the NFL, and if you're just a billionaire, right, that may not be affordable. And so we're seeing an enormous flow of capital into some of the emerging sports, into women's sports, as Michelle was just talking about. And so that's increasing valuations for the emerging sports as well. And so, Joe, let me follow up on one thing, and then Antonio, I'm going to have a question for you. And so you talked a little about institutional capital. You mentioned low leverage levels. Mm-hmm. With the prices that keep going up, there's only so many really unbelievably wealthy people that want to own a team that don't already own a team or more than one team. And so if you project out 3 years or 5 years, what does the future of sports ownership look like?
3-5 years, very similar to what we are today, right? In that institutional capital will continue to play a more meaningful role. I know I think that the catch line is that leverage plays has a lower impact today, but really at the end of the day, it's only because enterprise values have increased so much. Leverage levels in certain leagues, not all leagues, have actually gone up, or at least the availability of incremental leverage has gone up. But at the end of the day, there's if it's working, don't fix it. Or sorry, it's not broken, don't fix it, right? And so you're going to see continued momentum within the institutional capital space. I think the amount of capital that's being raised at the institutional basis to address sport is really, really interesting. I think the diversification in that capital is really interesting as well, right? So it's not tapping into just certain flagship funds or sport-specific funds, but there's a global diverse platform for institutional capital raising that's going on right now, from everything from the retail channel up to flagship funds, the credit funds, you name it, are all attacking it. So generally speaking, the leagues will be the governors on this. But I do feel like we're heading into just a continued momentum of what we've seen for the last 5 years and a steady state at some point in time in the next 5-10 years.
And Dad?
Yeah, I think you're seeing different types of capital, as you said. You're even seeing some of the insurance companies getting pretty aggressive. And as we think about where the next wave of institutional capital is coming from, people are looking at it through different buckets with different return profiles. So people don't always need to have the traditional high teens IRR type private equity firm, but you can see credit funds that have found their way into a number of these investments because the profile of these teams and the profile of the cash flows of a lot of these teams make it more of a credit-oriented investment depending on the league.
Yeah, and just to add, more on the international perspective, definitely. I think, and to your point, on the emerging league side, yes, we will see a lot of growth because there's more and more institutional capital coming in. And I think it needs to find alternatives to typically investing in premium assets. But on the other side, I do think on sort of the top asset side, there's thinking more European soccer teams or football teams for me, obviously, but also Formula One. I think there's only so much it can grow at this stage. And you think F1 teams were trading at 10 times less than what they're trading now. At least what the recent Aston Martin deal. So I always ask myself, where's the roof there? And I do think that at least, thinking European soccer and European football or Formula One, as sort of the premium assets there, I think we're reaching a stage where it's going to go flat for some time and sort of restructure its cap tables, restructure its governance, find certain structures at league level that attracts more investors, because right now it's definitely a riskier than investing in the US.
So Antonio is not an investment banker like Dan, Joe, and I. He's a principal investor. He actually takes risk and is entrepreneurial, unlike the others here. And so just talk a little bit about your business model, which is very interesting, right? You've made investing with athletes sort of the centerpiece of your model. And so talk about why you developed that strategy and talk about how you see it evolving.
Yeah, we're definitely different. And I think what makes us different is definitely the athlete DNA. We see athletes as some of the most strategic investors in sports, if they're actively involved, obviously, for everything that they can bring to the table, their network, industry insights, the commercial value that they can bring to the table. And I think, if you look at the institutional investor landscape or any investor landscape in sports right now, there's really few sports-born investors, right? Investors that are born out of the industry of sports. Even if you look at the big institutionals, they're sort of carving out sports verticals, but not necessarily born out of sports. And I think, and again, going more into Europe and into sort of beyond the US, which is where we do a bit more, I think it's such a young industry with a lot of that information doesn't flow around freely, that you need to be from the industry to have that edge, to have that access, to understand what gets things moving. And athletes can provide really that for us. And we were pioneers in getting them to understand the difference between investing and doing a commercial for equity deal, which is a lot that was done in the past, at least more in Europe again. And when they understand they have skin in the game, when they understand that they can add value even though they've never invested in their life, because they understand the industry, that they can really stand out as investors and feel that added value on their side, they get motivated to do more. So that's really our DNA. We've grown, obviously, beyond athletes on a capital standpoint. They now represent less than, of course, 10%, let's say, of the AUM we have, but they are our DNA. They are, why we're different and why we are very proudly sports-born.
That's awesome. All right, so let's change topics. Let's talk about media rights for a second. This is always an interesting topic to talk about, especially as the transition continues to happen from linear to streaming. We saw the NBA renew their deal at a very attractive AAV. UFC is up in the near term, and then the NFL, is up, in several years. And so how do you guys think about the evolution of what's happening? NBA had, Disney and ABC, Comcast and NBC, right? Two linear networks, which is contrarian given what's happening because of reach. How do you see the landscape evolving with linear streaming and just the increasing, pace of sports rights?
I'll go first, and everyone can add in. Clearly, it's fun to talk about because it is incredibly complex, and the future where this goes is very much unknown. The history would say it was quite simple. Looking back, you had radio, and then you had radio and broadcast, and then you had some cable networks thrown in there, national and local. And we've gotten to a place where when you think through from a league or team's perspective, or you think through a distribution standpoint, the world's just incredibly complex now, where you have these streaming platforms, and if you just kind of lump them into one bucket, that's I think understating exactly how unique those things are, because they come from different business models with different motivations and different nuances. And so that introduces a whole host of complexity, as well as international, right? International growth for U.S. sports distributing their product globally, and vice versa. U.S. fans having interest in global sport. It's created kind of new monetization streams, and therefore you think about new partners as well, right? So the world in total absolutely has become more complex, and that genie's not going back in the bottle, right? That's gonna remain the state of play for a very good period of time. I think the good news about it, right, no matter what side of the aisle you sit on, is that when you kind of look back in history, there's been, you compile the value of all premium sports rights in one way, shape, or form. Forget about the channel where it goes through the league or anything, or the country, you name it. The value of these rights have gone up and up and up on like clockwork, right? And I don't see that changing over time. The modules or the mediums or anything like that may change, right? There may be some winners and losers along the way, but put that to the side. Rights have increased because, and it should continue to increase because fans remain very passionate. It's a bedrock foundation. Streamers, I would argue, just generally speaking, are in the early days of their penetration. And think about their spend on content, general content, let alone their mix shift into sports content. You have a new distribution model seems to appear left and right. You turn on the corner, there's a new way in which you can consume sports. And you can't discount the power of linear players, and you saw it in the NBA deal, right? Obviously, there's still a very strong and robust bid for sports rights from the NBA players. So, I think the beauty of this thing is it's fun to talk about because it's incredibly complex. It's going to remain complex, and it's going to remain that way for a very long period of time.
And on the programming, it really just continues to innovate. When you think of the games on Black Friday, when you think of the play-in tournament and the in-season tournament, I think we'll continue to see as ways to create ever more valuable packaging, being able to slice and dice and determining what's on linear, what's on streaming, and what can be exclusive, and how are the leagues going to be able to leverage to get additional value from these exclusive properties that just never existed before.
António, just maybe on the European side, right? We've seen massive inflation in the U.S. There's been some more challenge deals in Europe. French soccer, didn't have a material increase or, had a slight decrease. And so what do you see from your European perch around media rights?
I agree with it's the billion-dollar question that everyone would like to know the answer to and understand the direction. I think it goes down to, particularly in Europe, again, to culture. Eyeballs are going up, and they will continue to go up, and the future of sports as an entertainment product is just going to grow again. Europe has always been different than the US in the sense that it's been always less about entertainment and more about culture, blood, sweat, and tears, right? And that has always been different and harder to monetize as things change. Culturally, that changes. You will have eventually more clarity on where these eyeballs are going to go, and then how you're going to package that and monetize that. But as of now, there isn't any clear answer, and I guess that's exactly what happened with French football, right? Is you just underwrite something and the assumption is just going to go up because eyeballs are going up, and then you don't know where they're going. And if you think about a few years ago when everything was so clear and everything was just on TV, it was very easy. You knew where they were going, so it just really became a bidding war. And that, of course, brings the prices up. The moment you don't know where they're going to go, and it's not just one product, but potentially many, that bidding side of things goes down. And, of course, that can also not increase the prices as they've in the past have. So I think that's what's happening in Europe. But again, I think there needs to be structural changes to happen first, and that will result from all the institutional capital flowing in and the professionalization of sports in general as a sector. And only then you will have clarity and will have, a more professional way in structuring these media products and selling them. So as of now, on sort of really on the top tier side, I also don't see them going up, obviously.
So one more European question, we'll come back to the US. And so when you think about making your investments in Europe, I know you have an investment in Serie A, you have an investment in a Formula One team, and probably others. Right, the structure of US sports is very different with our cost caps, our salary caps, our luxury taxes. How do you get comfortable from an investor perspective with some of the differences in Europe, and how do you think about exiting your investments as minority stakes?
First of all, it's hard to get comfortable, definitely.
We're asking hard questions here.
No, F1, that's what Liberty did, right? It created cost caps. It created the Concord Agreement, which limited the number of teams. Teams stopped being licenses with a defined maturity to be perpetual licenses, and that, of course, all these incentives allowed for professional investors to come in and know that no matter what happens, look at Alpine this year, which is our team. It's been a very bad performance, not this weekend, thankfully, but we are quite positive on the commercial side because there's only 10 teams and there's only 10, so it's easier to attract sponsors even if you're not performing. It's on the media rights, definitely, distribute them more evenly. So Liberty changed the governance and the structure around F1, and it became a very interesting investment. On football, it's a whole different ballgame. It's definitely tough, relegation risk, and for me, the number one, which is there's no salary cap on the player side. So the moment another Middle Eastern billionaire buys a team and starts paying 10 times for the same players, and then all your players want to go, and then that's the big risk. And until that isn't change, I think it's very hard to get comfortable in underwriting really, football risk at the top level. So I think there, either you invest on a brand, that's why we invested in Venezia. We saw a brand, we saw a fashion lifestyle play, and we came in early stage. So it goes down to entry point, it goes down to that sort of growth 50 to 150 million enterprise value deals where I think there's less demand on an investor perspective, so you can get in better entry points, so you cover a little bit or mitigate a little bit the other risks. And then the exit is very clear. Our exits are going to be to all the large investors that are raising a lot of money to invest in sports, and good luck for them to deploy all of that, and hopefully we're going to be a part of that.
Awesome. All right, back to the US. So two trends that we're seeing a lot of. One is the multi-team platform, right? The Harris Blitzers, the Cronkies. The other is building a new stadium and then building ancillary real estate around it to make it more of a, just not a game day experience, more of an experience, live, work, play, eat, etc. Are these fads or are these sustainable trends that are here for the long term?
Yeah, happy to take the multi-club first. I think that is definitely something that's here to stay. I think we just heard Michelle talk about as you're starting to accumulate teams and you build the back-end infrastructure, the ability to share best practices, the ability to really invest in data and analytics and to be able to share that with all of the teams. In a number of conversations we have, there's a lot of owners that have owned teams for a while. The valuations have appreciated a ton, as we've talked about, and a lot of them are looking to diversify and put capital into other teams. So I do think we're going to continue to see that trend.
Yeah, the only thing I'd add on is this is to call it a fad would mean to imply that it hasn't been going on for some period of time, but clearly even in this city, a multi-club platform has been created. It's been wildly successful from a commercial standpoint, and more recently on the ice and on the court. But that's aside from 1 second, there's definitely a place where there's synergistic benefit, and we can debate, is it easier to do within one city, within one geography, within one sport, you name it. But certainly there are proof points for decades now that there's something more than a fad.
So what do you think is, when you look out at the sports industry in general, both in the US and Europe, what do you think the biggest risk, right, to the industry is?
Go ahead. If you have one. I'm trying to think. Listen, I think in a sector like this, with momentum like this, you know, we have had, I'm not gonna say valuations are at risk by any means. I'm not gonna let that talking point come through here as I sit in this room by any means. But what I'd say is, the ability to continue to grow these platforms in incredibly more complex environments is a risk, right? There's greater, what used to be running a club was a local real estate play, right? Then it became a local real estate and media play. Now, if you own a club, you have a global platform under which you're trying to understand who your fans are, understand how to engage them best, how to monetize them best in certain ways. And there's risk around whether each and every platform is capable of doing that in a comparable way that creates a great product on the court or on the field that has some level of parity so it's enjoyable for fans still. So that just the growing complexity is a real risk from an operational standpoint.
Antonio, then Dan.
Again, speaking on my lens, I would say it's a cultural risk. I think the opportunity with Europe is always, looking at this massive ecosystem full of fans, full of culture, full of eyeballs, has been very poorly monetized, obviously, especially if you compare it to the US, right? And if you look at valuations of US sports assets versus Europe, and you also put that relative to the fan bases, you look at Europe and it just shouts opportunity. And it's very easy to call the story where you're going to bring in a lot of the US business models, the entertainment piece, and let's start to monetize these European fans. But if a European fan thinks you're treating him or her as a customer, he's not going to like it. So how to do that? How to balance this, this business approach to a sports asset in Europe, but manage the culture, the perception, and keep that stickiness to it, which has made it, particularly football, the biggest sport in the world, is going to be a very, very tough risk to take, or a tough thing to do. And then we're all under the assumption that, the more professional investors coming in, the more, the infrastructure around the sport in Europe changes and becomes better to make money, and it's all an assumption. So I think that's the big risk we're taking in Europe, particularly US investors.
I think as you look out, making sure that there's the ability to ultimately exit, right? And I think that's something that's talked about a lot with a number of institutions that have made a lot of investments. And to date, we're just seeing so much demand for those stakes, and it's such a scarce asset and such a valuable asset class that we haven't seen that. I don't see that happening for the foreseeable future. But as you think about long-term risk, if at some point it's much harder to exit from these investments, that could be a challenge that the industry will work through. And I'm sure we'll find a way to innovate.
Yeah, I would say to me, it's the consumer experience, right? If you think about trying to find a baseball game on television now, it's on like 9 different places and it's frustrating. And so as the world transitions to streaming, making it easy for the consumer to find the game they want to watch and not frustrating, I think is going to be a very important thing. So let's end on a high note, since that was the risk. What's the thing that excites you most about the sports sector right now? What's the most interesting thing to you?
Just to go first, I think what we're seeing in women's sports is incredible. The amount of demand, whether it's seeing what happened with Angel City or some of the other transactions that have happened recently, just how many different types of investors, both high net worth individuals and institutions, are just banging down the door to find opportunities to put money to work in women's sports.
Yeah, it's hard to leave a client meeting without talking about women's sports, without talking about youth sports, and for investors without talking about college sports, right? So those are the big categories. Within college, just to harp on that one for a second, you have obviously just a massive industry by any metric, number of fans, number of programs, number of brands, amount of dollars flowing through it. You've had tremendous amount of change, right? And change becomes, if you're asking what's interesting, change is interesting, right? And increasing complexity, obviously, with relationship with players and athletes. And the other thing is, there's just this an argument that operationally speaking and perhaps economically speaking, it can be more optimized, right? And so that becomes, when you think about providing financial advice, or advisory type services, those type of variables create a lot of interest and dialogue.
I agree. I was going to say college too. It's fascinating. Antonio, lead us to the finish line.
Yeah, women's sports obviously, but not to say the same thing. I think that's an obvious one. I think disruptive approaches to traditional sports is something we love, and I believe to be very opportunistic. Tomorrow sports, SailGP. These are two examples of sports that have history, that have culture, that have fan base, that have demonstrated there's something that attracts them, but they have some inherent problem, and there's a disruptive either league or concept to solve that problem, and that's what we saw with Tomorrow Sports, which basically trying to bring some media value to golf, and with SailGP is trying to really open up as well, sailing, a very sailing sport to other generations, other demographics and women as well. So disruptive approaches to traditional sports is something we see as very trendy.
Great. Well, thanks to Scott and the Sportica team for having us, and thanks to our panelists for a good conversation, and have a great rest of the conference.